chances are no one's really taught you about how the US tax system works. So let's dive into it. That just means that your income is taxed in layers and not all at once based off of one flat tax amount. So as you make more money, it gets taxed in different layers according to the tax brackets. For example, if you make $100,000, it's not all taxed at one flat rate. Instead, you pay lower taxes on the first portion of your income, and as you go into the following tax brackets, you pay progressively higher taxes on those rates. So when someone says, what's your marginal tax bracket? It means what's the last dollar that you earned falling into for tax bracket purposes. And that may be as high as 37%, and it could be as low as 10%. But your effective tax rate is the average amount of tax that you're paying across all of your income. So even though you might fall into a marginal tax bracket of 37%, you're probably falling into an effective tax rate of 20%. The point is, the effective tax rate is always going to be lower than whatever your marginal tax rate is. So moving into a higher tax bracket doesn't mean that all of your money is now subject to that higher bracket. It just means that that portion of your income that increased is now subject to that new tax bracket's tax rates.